Good morning, everybody. Hope you're all ready for.
Good morning, Martin.
Hello, Neil. Get yourself a wee cuppa, beer, scotch, moons.
Of course, all of the above.
We'll start as usual at 5 past, about 5 minutes time. You then.
Thanks, Martin. See you shortly.
Good morning, everyone, and happy Thursday. So we will just give everybody their usual 5 minutes to go grab something to eat, drink, and just get comfortable. And we'll see you in a few minutes.
Thanks, Amy. Loving the lipstick, by the way.
Thank you so much. Going to become that ad for Maybelline.
Maybe it's Maybelline.
Exactly.
Oh, we've got a hand up already.
Good morning. We're getting a thumbs up. It just says accounts, but we can't see your name.
Could be Vicky.
Maybe our hands up has got a question. Because the hand is still up. Or was it trying to do a thumbs up and then put the hand up? Counts? Question? Oh, there goes the hand.
It is indeed Vicky.
Oh, she said she doesn't have a microphone. She just wanted to say hi.
Hi, Vicky. Yeah, I've got accounts saved as Vicky everywhere. I think when someone phones me from my own accounting firm one day, I'm going to be like, hi, Vicky. And they're going to be like, who the hell are you?
Okie dokie. It has gone 5 past, which happened so fast. And so we're going to be starting off with, it's really a conversation today. And obviously every team and every department is very different. But we wanted to talk about what are the different roles and responsibilities within the credit team to say, you know, what is each person responsible for? If you have never been exposed to it as well, you know, what is your team doing? Why do they just say no when you feel like they should have said yes? And, you know, this is a vital, important role for 2 things. Something I like to do with my team is if you are one type of person in a business and you're looking to say, where do I want to be when I grow up? It's good to see what does that flow look like so that you can say, you know, one day I'd like to be the financial manager. What's the trajectory of a financial manager? Where do I need to go? What skills do I need to get in order to get to that next part? But also there's the next section that says, you know, what does each person do? So if I am the credit controller, then what should my, you know, debtors clerk be doing, for example, or what's their role in comparison to what my role is? And how do we then all work together to make sure that the full process of collections is obviously the most optimal? So and that is what we're going to be talking about today. And I know that Martin, who is our senior credit executive, has had a lot of interactions as being either in this particular role or also having managed these roles. So why we're bringing this up as well is to make sure that if you have questions or you're unsure of something, we do have Martin who's able to help you. If you're wanting to structure your teams differently, if there's anything we can do to help you, of course, it always stands to say that we are here for you. Okay, so let's jump into the first one. I'm going to share my screen with you. Give me just a second.
While you're doing that, Amy, it's also that various companies have different.
Oh, we lost you there, Martin.
Where, so can you hear me now? Can you guys
Yes.
hear me? Okay. So some
Yes.
companies have a back office where all the credit controllers are centralized, especially large groups, and they do the credit job on behalf of the business. Others are decentralized and the team is scattered all over the country. So there's various different, and then of course, all these new terms they talk about order to cash. So there's different people with different functionalities, and in other companies, a credit controller does the full functionality from opening the account to taking it to legal. So it all depends on how your business is structured and how your business in its policy has decided they will be managing their credit department. Back to you.
Excellent. Thanks, Martin. It should come up any second now. Sorry, for some reason, I'm not so efficient on sharing on Canva. I need to work on my skills a little bit better. Okay, let me know if you can see my screen.
It's coming through now.
Indeed.
Okay, excellent. So we'll start out with the first one. So let's talk about the debtors clerk. So a debtors clerk, also known as accounts receivables clerk, plays the critical role of managing the accounts receivables department. And their responsibilities include opening of accounts. So if we were to put this into perspective, once the documents have been collected from the sales team, it then usually goes to a debtors clerk who goes and implements this information onto your ERP system, creates the account number, and then obviously will then communicate with the customer to say your account has been opened. Neil, do you have a question?
Maybe we can just touch on what an ERP system is briefly.
Okay, perfect. So an ERP system is the system that you would use to capture or manage your debtors. So sorry, that was bugging me just a little bit. So it is the system that you would use, and everybody's system is different. Could be Sage, could be Oracle, it could be anything like that. So an ERP system is your internal system that your team uses to manage your debtors. And each company obviously has a different system. Some could be self-built. Maybe you have a team of devs that are able to do that for you and build you your own system, and some are not. Okay. So then we also have
Enterprise Resource System. That's what ERP stands for. Enterprise Resource System.
Enterprise Resource System. Thank you, Martin, for the exact. Okay.
So
So
Enterprise Resource Planning, ERP, the planning. Sorry, I got the wrong word.
Busisiwe has a question.
yes, Busisiwe. Busisiwe.
You are on mute if you're trying to talk, Busi.
She's gone.
Shame, I think
Okay.
she's having trouble. She'll be back.
Okay, perfect. No problem. When you're ready, we are ready. Okay, so let's go back to where we were. So obviously getting the report, so generating and reviewing of accounts receivable reports to monitor outstanding balances. So this is the person that's going to manage all of your outstanding accounts, making sure that they are paying within the terms that have been provided, collecting those funds, understanding their processes, and making sure that they know how to submit and plan invoices. Okay, so in this particular case, you can also see that we're saying that they do the filing. Obviously, some companies have gone paperless, but they would be responsible for filing and maintaining, organizing the records according to the law. How long should those records be kept? Where should they be kept? And that kind of information as well. So all very, very important roles as well. Then they would hopefully, this doesn't happen to you, but hopefully processing any credit notes that need to be processed for any reason whatsoever. They would also be communicating with the sales team to ensure that they have collaboration with the sales department. And as I said, and that is because often, hopefully not for those on TradeShield, but often it happens that you didn't get the documentation that you required in order for you to then process and open those accounts. So the communication between the debtors clerk as well as the sales team needs to be ironclad, and making sure that you understand you're on the same team, that you are here for each other and not, not at odds. Martin, is there anything you'd like to add around the debtors clerk?
No, and it's a good step to start in your credit control career so that you understand the basics of it. In other words, what is needed to open an account? Why is it needed? What information is in there? Why is that information required? How does it fit into the credit policy? Why is there a credit? All of those things is something that the debtor clerk needs to understand, because when they start gathering that information, they must understand the importance of that information. Why is it that the credit controller, the supervisor, the manager, the senior manager, the financial director wants that information, and why is it playing such an important role in opening the account?
Absolutely. Thanks, Martin. Does anybody else on the line have a question?
So Busisiwe's question was, are you going to be sharing this content with everyone once we're done?
Yes. So what I normally do is I do post it on the Knowledge Center. I will add all the slides that we're going through as well as the recording of the session. So it will all be in the Knowledge Center. I will try to post it. I'm not sure if everybody sees if I post it afterwards on the chat to say that it has been uploaded, but generally it is uploaded by the following day. So it should be there with all of the information.
Perfect. Thank you.
Okay, perfect. If not, you can always reach out to us and we'll definitely send you the link. Okay, so let's move on to the next slide. So then we've got the credit controller. So the credit controller is responsible for managing the debt, ensuring timely payments. Their duties include managing customer accounts, setting up of a new account. So this is very similar to what you would refer to as a debtors clerk, but some companies call them debtors clerks and some companies call them credit controllers. And so it would just depend on your type of company, and each one is different. I just want to actually, sorry, recenter it. I don't like the slide, but that's on me. There we go. So their payment collection, so negotiating payment plans, collecting payments, and resolving any discrepancies. For example, any purchase order information, making sure that the VAT numbers are correct, making sure that you're dealing with the correct entity, the right registration number, the right customer, understanding their processes. Do we need to submit on a portal? Do we need to send it in an email with certain information? What is it that we need to do as a credit controller to make sure that our invoices are sent out on time, B, that we understand that they've followed the processes that the customer requires of us, and C, to make sure that we collect those funds. Part of that is also doing the risk assessment, so conducting credit risk assessment. Maybe that could include looking at financials, looking at credit reports, and then monitoring them going forward. And again, each company is different. You may require your credit controller to do, let's talk old school, to do trade references as well, to pick up the phone and see some trade reference information. So that is all within their area. And then obviously documentation and reporting to management. So detailed records, who's outstanding, helping to manage those outstanding limits, as well as any credit notes. So if there were any credit notes, then it would need to be accounted for as well, and obviously planned for in the budget. So that is the credit controller in comparison to a debtors clerk. Very similar roles. Sometimes they can be, either one can be separate departments, or they could do the role together, just depending, again, what you would say. I haven't added it in here, but I'd say the communication with the accounts, with the sales team is absolutely crucial as well, to make sure that that communication is there.
Absolutely.
Martin, anything else you want to add from your side?
And this, Amy, is where when people employ the order to cash module, that this role can even be split further. So they'll have a banking clerk. And what does a banking clerk do? They only check the bank for payments that came in. They then get the remittance advice from the credit controller. They take the money out of the bank. They put the money onto the debtor's account. However, the credit controller then goes and applies the cash against the various invoices to make sure that it's applied according to the remittance advice. And then the next step you might have is a collection block. And the credit controller that does collections only does collections. So they will only phone the client and say, this is what we need, or whatever. And then you have someone else who might be talking, and they call them query clerks. And the only thing they do is when an invoice has a query on, they will talk to sales around the query that has been raised, or operations if the delivery wasn't made in full, or anything like that. So they break these roles up into more specific or defined roles, and not one person doing the whole functionality as it is here. So that's what you also get.
Absolutely. And that's obviously critical when it depends on the size of your company as well, to say, maybe the size of your company says, we have 10,000 or 90,000 debtors, and therefore it's impossible for a specific person or a specific team to manage the entire process the whole way through. So that is very, very important. Okay, so let's go on to the next one. Okay, so then we've got our senior credit controller. So the senior credit controller is there to oversee the credit management function and to ensure efficient control of their responsibilities and include. And now this person is going to live, eat, and breathe your credit policy, and making sure that everyone that is in their team is following those rules. Now, those we've mentioned before, a credit policy dictates how you should do something, when you should do something, what action should be taken if this happens, and or if this person says whatever they say. So it's very important that you live, eat, and breathe your credit policy. And this person is the person that is going to make sure that everyone in the other departments follows that as well. So here you can see it can be managing the corporate accounts. So anything that is larger than your standard or average account. It would be the credit risk assessments as well. So earlier we mentioned that it could sit in your credit controller's team, but it could also require somebody to do a more in-depth financial analysis. Also understanding the different credit limits that are required, as well as the terms that are provided. And these are all then calculated and saying, what can our company afford to do? How do we calculate this into our budget? What terms are we able to provide based on the fact that, our margins, and they have to go and have a look at all this information to say, this is what we can offer our customers based on what our company is able to do. And so they manage to say, we are able to extend terms, we are able to extend credit limits, and these are the capabilities within our business. Okay.
There's also one critical thing here, Amy, that we've left out between the credit controllers and the senior credit. they might also do what we call client visits. So they might actually go to the client's site, especially when there is large volumes of queries that are remaining unresolved. They will go to the client's office, take the invoices that are under question to the client's office with all the supporting documents, sit around the table with the client, and then discuss what the issues are, come to a resolution, implement the resolution, get the invoices corrected if they need correction, and then, of course, get those invoices paid ASAP.
Absolutely. So I've added on there for you, Martin, to say, client visits to assist with query resolution and or payment plans, which can then be created by that person. So you also have the resolving account query, so efficiently resolving disputes on invoices and other account issues. So it may require you to be a more senior person to say, we can either give you a discount, we can write information off, and Martin, I know you've spoken about this before, when the difference between a credit note and a write-off. A credit note is when the company has actually done something wrong and are responsible for that, the reason why that invoice can't be paid, then a credit note should be issued. But if there's a dispute in terms of the product was faulty when it got delivered and you disagree with that, it was tested, it was perfect, it was whatever the case is, and that person refuses to pay, even though you have provided proof that you were in the right. I'm going to use those words with whatever the English deelteken name is, and therefore it be written off as bad debt and not a credit note.
That's correct. So that usually happens when either they don't have the cash to pay you, or they were just out to defraud you right from the word go. They weren't going to pay you in any case. Then, of course, you're now sitting with a situation where they are very capable either to pay you or they're not capable to pay you. They've gone into liquidation or they've gone into sequestration or they just absconded. That's a very difficult word as well. They disappeared is the nice word for it. You then sit with a debt, of course, which you now have had to make provision for under your IFRS 9, and you then write that debt off against that. At the very end of the day, it hits your bottom line the same place, a credit note and a bad debt. But it is for auditing purposes that you have to have a clear route as to say, what is it? Because a credit note is going to say it was the wrong pricing, or the products wasn't delivered in full, or whatever it was. And then, of course, a bad debt is going to say this client disappeared, because a credit note is not going to prevent you from continuing trading with a client, but bad debt is going to say when this guy comes back to want to open an account with you, say, whoa, we wrote off money on Martin Pets of PDY Limited. We're not going down there again. That's, of course, why you have to differentiate between them as well.
Absolutely, absolutely. And you're going to want to keep record of that as well, so that should they come back into your world, you want to make sure that you either tread carefully if you still want to move ahead, or that you say, this is actually something we don't want to move forward with. I see, Neil, you had a comment.
Yes, thanks, Ames. So Vicky was just wondering what sort of role would best suit her at her company, because what she essentially does is she does all the credit control roles, but she's basically their main super user there. So a credit manager role might suit her best, or a credit controller role. Maybe you could just differentiate the two for her in the sense of TradeShield and how that would impact her world.
Okay. So I mean, once I'm gonna put a I'm going to put a pin in it for a second. And the reason why is because it may be a combination. As I said, depending on the size of your company, then it could say, oh, this is a better suited role to you, or this is a better suited role to you based on the size of your company and the size of your debtors book, where you may actually be a senior credit controller, but you're still also filling the role of a credit controller as well as a debtors clerk. And therefore, we could show you what that would look like. I hope that's okay with you. I'm just going to put a pin in it, and then let's see if we cover that while we're going through the full list. Okay.
Perfect.
Amy, there's a question as to who approves the credit note. Now, this is a very, very critical question that has been asked. There's a thing called segregation of duty. Now, my first question is, Who initiates the original invoice? In other words, it's someone that creates an invoice. That's sales. They say, I'm going to sell you this cell phone for X amount. So it is them that have made the mistake. So the credit note must go back to where it originates from. And those people who originated the mistake must do the credit note. A credit note must never be done by credit control. You segregate those tasks. Why? Why, Martin? Because I've seen it in my years that credit controllers create credit notes to clean their ledger. In other words, they say they go somewhere and they make up a facetious story and they say, we need to do a credit note just to get this old aging out of their debtors ledger and not collect the money. It's fraudulent activities and stuff like that. So credit notes must never, ever be done by a credit controller. Goes back to the originator where that invoice was generated. That person must take accountability. That person must raise the invoice and say, I've made a mistake. This is what the invoice should look like. And then take the punishment for raising the credit note. I hope that answers the question.
Absolutely. Thanks, Martin. Now I can see why you were a scary credit manager. I'm just kidding. Okay, so then we also want to ensure compliance. So, ensuring adherence to company credit policies and industry regulations, making sure that if we are required to do FEEC, if we are required to have all of our surety documents filed in a certain place, if we are required to get our credit insurance and all of that, we are then that person that is responsible for that information. Okay, and then last but not least, as I said, as Martin said, we also want to be the person that visits the clients to assist with query resolution and payment plans. Okay, then we've got the head credit supervisor. So the head credit supervisor manages the day-to-day operations of the credit control department. Their duties include portfolio management, so maximizing cash flow, minimizing risk by managing assigned portfolios. So this is making sure that the right credit controllers or debtors clerks have been assigned the correct accounts that they can manage, making sure that they've split their risk properly to say, if all of our high risk customers sit in one person's portfolio, is that a safe way of managing it? Also their legal processes, as well as any accounts that have been handed over. Reporting, so ensuring accurate reporting and adherence to business processes. And again, this is speaking to that credit policy to make sure that what was provided goes according to what you have discussed as a business. And then team leadership, so supervising the credit control team, ensuring their compliance with company policies, giving them the tools that they need, giving them maybe the hardware that they need to actually complete their jobs. So very important to oversee and make sure that everything is run in a specific way, to make sure that each managing of somebody's workload as well, to say, how many debtors can a person handle in our type of industry? If they're going to be managing both the collections as well as the opening of the accounts, is that an attainable goal for the amount of applications that we get every single day? So can somebody open up how many accounts in one day? And if we're going to collect, how many can they do in one day? So that's what the role of the credit supervisor is, to make sure that they manage your day-to-day job, making sure that you're not overwhelmed and that you don't have burnout as well.
Are they also responsible for key performance indicators, in other words, measuring the KPIs of the credit controllers? But there's also one very critical role that plays out of the KPI, and it's called an IDP, or an individual development plan. So when they see shortcomings in the credit control team, plan around training for them to go and get some more extensive training so that they can improve their skill in the specific role that they play in that credit control department as a credit controller.
Absolutely. So a very big role, and obviously it's not so much the day-to-day, but more the management of those portfolios, making sure that you've organized your team correctly. Does anyone have a question? No. Okay. Perfect. So then we move on to the credit manager. So the credit manager oversees the credit assignment and risk management functions. These responsibilities include evaluating credit worthiness, researching and assessing clients' financial stability, This could include going to do on-site audits of your own, having a team like TradeShield do it for you or Credit Bureau do it for you, making sure that you are constantly evaluating this customer. So it is not a matter of only when you onboard them, but also managing that data going forward. Your credit score models. So if your company is the type of business that needs, a specific credit score that has been configured specifically for your business, or if you rely, on the credit score of an outsourced business like TradeShield, then you would make sure that you are in line with that. So a lot of companies do have preset scorecards to say, we need to take into consideration these factors. This is how much weighting it has in terms of what we're allowing within our business, and that is the scorecard that you would use. Sometimes it's like a 1 to 6 like we use, sometimes it's a 1 to 10, and there are different things you could include in that scorecard. Martin, I'm sure you can add a little bit of meat to that comment.
They're going to put accounts on hold that have exceeded the term threshold, or that hasn't paid, or is got excessive queries, or they're going to review the credit limits and make sure, or ask for securities. And we've spoken about security so many times, but make sure that that is your company policy. Make sure that your company is happy with you asking for securities. Don't just go and ask for securities because it sounds so good or it is a nice thing to have. But if it's not your company policy, because someone needs to manage those securities. And then, of course, the manager as well is very much responsible in some instances for the budgeting of the credit control department. To say, how many people do I need? How many data staffs do I need? Why do I need so many people? How many accounts do I have? Allocate the accounts to the credit controllers to make sure that each credit controller can handle the volumes that there are inside the credit control department. And then, of course, if a credit manager has supervisors, then the same role as what I just explained about the credit controllers, this manager will not micromanage. This credit manager will manage the supervisors and will do the KPIs of the supervisors and will do the individual development plans for the supervisors, and also do a very critical thing called succession planning. And what is succession planning? They start identifying people to take the role of when they are not there, and also help the supervisors again identifying people in their teams to take over the role when they're not there. So when a supervisor goes on leave, who's going to stand in for them? Or if the credit manager goes on leave, because we have to go on leave. And actually, when it means going on leave is switch off completely. Then there is someone standing in for you. But in the meanwhile, you have groomed that person with capabilities, and you have helped them, and you have taught them, and they know what is needed, and you've mentored them to stand in for you in that position.
Absolutely. So I'm adding your comments here as well, so that afterwards it will then include a full list if somebody wants to go and take this. What's the word I'm looking for? I'm like I can't speak today. Go and take this presentation afterwards. Okay, so and then of course there's the debt management side of things, so monitoring payments, managing the debt settlement, and I would even include over here that we're also looking at the ECLs as well. So the ECL calculation, on what's going to be expected, because that would then need to be budgeted for as well. I'm going to add that in as well. So the ECL calculation to make sure that we are getting ready or prepared for any expected credit losses that we might have, budgeting for that as well, making sure that we are aligned with our company's policies. Okay, and then the last one, of course, is the creation of the credit policy itself and the maintenance of it as well. And I know that you are very passionate about that as well, Martin. Okay, so then we go onto a divisional credit manager. So again, just deciding on the size of your business. So divisional credit managers, they manage and implement strategic and operational plans of their specific division. So their duties include strategic planning, which is development and implementation of divisional strategies and policies, project management, overseeing the projects and ensuring that they align with divisional goals, and then stakeholder management, managing their relationship with the different stakeholders and ensuring effective communication. Now, this role is very important, especially if your company is extremely large. So, for example, if you have a holding company with multiple subsidiaries where, you know, each company might be doing something totally different, it could be that you have different regions. For example, you might have a Cape Town, Durban, and Johannesburg region, and each one has their own divisional credit manager that oversees their plans for that team, as well as says, where do we go from here? How can we improve our systems? How can we improve our product? How can we improve our collection rate? How do we, you know, what information and what strategies can we take to improve on what we're currently doing? So that's what their role is, to say, you know, from a higher level, if we're getting a lot of tickets on our support desk because customers don't get our invoices on time, or our invoices are missing critical information, or, you know, the date that we send out that information is not enough time, can we shorten that period of time and rather send it on the 25th of every month instead of the 30th of every month? You know, so there are different ways that you can then go and see, how can we improve our performance? What systems maybe they can use to say, you know, if we all had TradeShield, then all the different department heads would be able to see what is actually happening in each one of their debtors books and manage it from there as well. Martin, I leave this space for you.
No, it's a very important role as well, because the divisional credit manager, in most instances, they are already a credit manager, but it's a little bit higher because there might be a national credit manager in another role. And the national credit manager is one that starts setting budgets and doing cost planning and doing, what is the word I'm looking for? I'll get to the word now, but they then are busy getting groomed for that role as well. So, you know, it's not all companies that will have a divisional credit manager, or not all companies will have a credit executive or a national credit manager. And it is, as I said just now, it's all in the succession planning role as well, and moving from one space to the next. And our divisional credit managers might have regional credit managers under them again, and exactly the same. They must do the KPIs, they must do the individual development plans, they must ensure that the staff under them are reaching their collection targets, because it all rolls up to this person and the accountability that this person has, and what they're going to be accountable and responsible for in the end of the day.
Absolutely. I can see there is a bit of commentary going on. Let's just have a look and see. Master of credit. I like that.
No,
Neil.
I thought that Sharif had a question, but they were just commenting on
just make a comment.
that
Okay,
who does that person also contributes to IFRS 9. Nothing to get there.
Okay, no, that's perfect. I was just checking to see if we had missed any comments or questions. Okay, so that would be the divisional side. Then we get to the credit director. So this would be a divisional credit managers manage the implementation of strategic and operational plans. I just want to see, did I?
That's the word I was looking for, strategy plan. So that director or credit executive does the strategic planning of the team, very much in relationship with the credit of the sales director, very much in relationship with the operational director and those guys, because they sit together and they say, how are we going to ensure that we've got the right cash flow to grow and manage our business? And that is the role of this person, that strategic role. Whereas if a company doesn't have one like that, it's usually the role of either a financial manager or financial director. But in a huge company, this guy, the credit director or your credit executive, does that strategic planning role. And that is a very, very critical role.
Absolutely. So I just wanted to see that I left out also the policy development as well as so making sure that the policies of the company are adhered to, planning them, keeping them up to date, keeping them current. For example, if your company used to rely on bank codes and now bank codes are not so easily readily available, what's plan B? If your company requires you to have audited financials submitted, what do you do in a case where someone doesn't want that? If your company used to rely very heavily on trade reference information and now that is no longer available, what do you do about that now as well? Then their risk management, so overseeing that credit risk management and ensuring compliance and regulation. So there are a lot of rules and regulations when it comes to credit, as well as when it comes to charging interest or, anything like that. Very important to make sure that you understand the legalities around it, because you can't charge interest, if you want to call it, without being a registered financial institution. So how do you get around that in terms of you would still want a penalty fee, for example, to say, if somebody pays late, what can I do about it? And the other side of the thing could be settlement discounts. If we are willing to give a settlement discount, how much settlement discount would we give? What period of time would we give those settlement discounts? Is that even something that our company would offer? In this area as well, to say, do we do invoice discounting or factoring in order to manage our debtors book as well and our cash flow? So that would be under the credit director's decision to say, who do we discount with? Who do we invoice factoring with? Which factoring house are we using? And making sure that we manage those relationships as well. If we are using credit insurance, then this is the person that also would manage those relationships with the credit insurer to say, do we have a limit of discretion? Don't we have a limit of discretion? What kind of debtors would you insure? Are we only going to do the 20% of our top 20% of our book? Are we doing our full book? Where does our risk lie? And that all sits with that credit director to make sure that that information is then covered as well according to our different company policies as well. So I see there's a little gap there. Martin, anything you want to add onto that?
Especially when it comes to the credit policy. A credit policy is not something that should be written by
and
the
or static.
Yeah, because it's a document that speaks on how we as a business wants to do credit. So a lot of input needs to come from sales. What is the margin? Operations, how quickly available is the product? How long is it going to take us from the day that the product is ordered to deliver the product? How much terms are we going to? All of these things are input that the rest of the business needs to give when you create a policy. Why is it? I want everybody to have buy into the policy. Although the credit director, manager becomes the custodian of it, and they are the ones that polices it. It shouldn't be a document necessary to police. It should almost be like when you walk into a company, they give you the credit policy to say, this is how we do business. And then you just live by it.
Absolutely. And that's exactly it, because the credit policy then dictates to us to say, if somebody doesn't pay within a certain period of time, what do we do? If its customer has decided they're never going to pay, what do we do? Who do we hand it over to? What's our process for handovers or legal disputes or so it then gives everybody an idea to say, this is what we need to do. Our collection policy is X. Our time frame is Y. If this doesn't happen, do that, so that everybody is aware of what each person is responsible for, all the way down to that debtor's clerk. Okay, so then this is where we want to grow up to be. We want to be the financial manager at some point in time. And this is, of course, a very vital role in maintaining the financial health of an organization, making sure that, we have somebody strategically. I'm just thinking, can you see the black? Is it okay? Or should I change?
No, it's not very visible. What we can do is when we send the one off, we can just make the background image a bit. We can turn the opacity up just to fade it a little bit.
Okay, perfect. I just want to make sure that everyone can see what it is that we're talking about. There we go.
There we go. Perfect.
Thanks. Thank you. Okay, so obviously we're talking about budgeting. So we want to oversee the preparation of the management of the budgets to ensure that the efficiency and the use of the resources as well. So this comes down to how many credit controllers do we need? If we've got a system, does it replace the role of a credit controller? If we've got something that's automated, does that take away from that? How do we scale our business using fewer people, more systems, or just working smarter instead of harder? What does that look like? Then we've got the financial analysis and reporting, and that's the financial analysis and reporting of the business, not of the customers that you are onboarding and doing, doing business with. This is saying, how is the health of our company? Making sure that we are managing those management accounts, making sure that we are, working with our auditors to make sure that we have our financial audit in preparation. If they've got external auditors coming, what does our company's financials look like? So that's very important to make sure that we're managing, and that's just not only within the credit team, but within the business in general, to say, what are all the different teams' budgets? How are we faring? How much income is coming in? What expenses do we have? And making sure that we're planning for those correctly. Then we've also got strategic planning. Sorry, yes, Martin.
I just said the word is cash flow.
Cash flow, exactly, your cash flow, to make sure everybody's going to get paid their salary. Kind of important, I think, to make sure that everyone is going to get paid at the end of the month. So very important on that side as well. Then we've got our compliance, so ensuring that you adhere to all the relevant tax laws, regulations, best practices, making sure you're filing your returns that you need to, whether it be with SIPSI, whether it be with SARS, making sure that all of that information is therefore adhered to ensure that you don't get any penalties or fines, especially on a privacy policy perspective, making sure that you've got all your terms and conditions that need to be revised. That all sits here with the financial manager. And then, of course, you have the human resources side of things, so hiring and training our finance staff, making sure that you actually manage that. I don't think the financial manager actually does the training, but they would set out the plan for what that training would look like. And that, of course, includes training on the credit policy. So very important to make sure that this person is going to make sure that, everything is adhered to, that the person is onboarded correctly, and that they can get up to speed as quickly as possible. Neil has a comment.
No problem. Martin just answered the question in the chat. No stress.
Okay, perfect.
Someone just asked, it's not actually that you need to be registered as a financial service provider. You need to be registered under the National Credit Act when you charge interest. Okay, so that's where the interest factor is. And just a little bit of elaboration on interest. Make sure that your administration in your business is 100% correct. Because I can tell you, out of years and years and years of experience, that 85% of the time, when a client is not paying you, it's because of your own administration failures. Wrong pricing, goods not delivered, and now they ask for credit and they don't pay you. And now we start charging interest. And then you get this tail of interest that's lying there because now they start paying the invoices because the queries have been resolved and your system has been set up to charge automatic interest. And now you sit with a problem. Now you've got to reverse the charges. It makes yourself have a huge burden. So understand the complications. It's good to have that clause inside your terms and conditions to say we can charge you interest and at what the interest rate should be. And in instances where you now feel, listen, I've had enough now of Martin Pets Pty Limited, I am now going to charge you interest. You can then charge them interest individually and send that to them and say to them, this is why we're charging you interest. But at least you then have had the clause in your system or in your terms and conditions, but you need to be registered under the National Credit Act to charge interest.
Okay, excellent. Thanks, Martin. So I'm just going to move to the next one. So the next one, of course, is the Chief Financial Officer or CFO. So again, we've taken a role, a step out of the system to say we're no longer necessarily dealing with the financial institutions, or we're not talking about the actual customers that we talk, our debtors book. We're now talking about the business as a whole. So we're talking about how this person runs the business, okay? And that's making sure that you exist the following day and the following year, and that you have month on month and year on year growth within your business. This person is going to then work with the sales team to make sure what's our growth trajectory like, what's our sales forecasting looking like, what's our end goal to say if our company is a 55 million rand annual turnover company. What do we want to be next year? And then how are we going to get there? What steps do we need to be putting in place? So that is what we're talking about when it comes to the financial planning and budgeting of the company we work for. So if we were to talk about it in our example, so Rahil is our COO, and he works very closely with the team to say, what are our goals? What is our company goals? And then bring that down into the rest of the business to say, if this is the 4 company goals that we're working towards, each team then has goals that roll up into that goal to make sure that we achieve that target. And, so that is what they do. And it's specifically around the planning and the budgeting of our company, making sure that our expenses are in line with our assets, making sure that we have enough of a plan to forecast for the following year to make sure that we bring enough money. If you need to hire more staff because you are growing and you're going to need more people in that role, then that sits in the CFO's portfolio to make sure that they are ensuring all of the money that you are going to need to run your company is actually there. They then obviously do the financial reporting that's being compiled by the financial manager. They then are, going through everything, making sure that your pricing is correct, making sure that your profit margins are correct, making sure that you have then created all of that, checklist to make sure it's all working correctly. Obviously, risk management, so identifying big risks, and this could be that if we bring it back down to the debtors department, if you have 10 customers that bringing 90% of your income, what did those 10 customers, what would happen if one of them fell off? What kind of impact would that have to your business to make sure that you are then safeguarding those relationships as well? Then we've also got to have the strategic decision making, so working closely with the CEO, and the CEO, I know we haven't got it here, but the CEO says, what does our business trajectory plan look like in the next 5 to 10 years or 10 to 20 years? They have that big plan. And the CFO goes, what do we look like in the shorter term? What do we look like from the 1 to 3 year plan to make sure that, the 1 to 10 year plan still happens? And so we're working short to make sure that the whatever the plan is that the CEO has got for your business, that the CFO is looking at the budgets for that to make sure how much money are we going to need? What growth do we need? Okay. And then, of course, leadership. So providing efficient professional leadership and ensuring the establishment is financially sound. Making sure that you have the right systems in place. For example, if you want to change your accounting system, if you'd like better reporting, this is where it would fit into the CFO's area as well. So they are responsible for everything in the business when it comes to money, whether it be spend, whether it be income generating as well, to say, we need everybody's input to know what we're going to need to do in order to make sure that we are still around in the 1 to 3 years. Neil has a comment or a question.
100%. So just a quick question. So I know that you mentioned the CFO is in charge of the money and the reporting and such, but as we know, credit controllers and credit managers may also need to report to their upper management in some shape or form. What sort of reporting mechanisms should they be leveraging, or things they should be looking out for to report at that level and not necessarily an exco level?
Neil, it all depends on the structure of the business and what the business does. Some CFOs will have the credit manager reporting into him. Sometimes the credit manager reports into the chief operating officer, and sometimes the credit executive reports to the CEO. But in the majority of roles, listen carefully to what I'm saying now. The CFO is the guy that runs the business, not the CEO. I'm saying this with tongue in cheek. The CEO is the face of the business. He comes with strategy, but this guy is the guy that says, do we have the money? Do we have the people? Do we have the capacity? Can we bring this? Can we implement it? How are we going to do it? How much is it going to cost? If you listen to what Amy has just said, this guy or this person, this woman, because it's
could be a lady.
Woman as well, they play a very important strategic role inside that business. And okay, so in my years of credit management, from a credit management role, I reported to either the financial manager or the CFO. because in some instances, the financial manager reports into the CFO. If it's a business very small, you'll have a financial manager, and that person does everything like the CFO. He just doesn't do the strategic planning. That happens by the managing director because it's got a different name. Yet, when there's a CFO, the financial manager might not be on the same level as a credit executive. You might have a financial executive, which is the CFO, but the credit executive reports into him. And I mean, I cannot tell you how many times I sat around the table with my CFO, and having discussions around cash forecasting and cash planning, because you can't plan what you're going to spend if you don't know what is going to come in. And that's why this
Absolutely.
guy and your credit works very, very, very close with one another. I hope that answers your question.
Absolutely, and
Thank you.
maybe something that we can just draw for you, which I will add in a little bit of a nicer picture. But we live by this in our own company as well, to say, you know, there is this pyramid, and you know, when looking at your team's goals and looking at, you know, what you need to do, there's actually different levels that include each person. So the first one would be, you know, your senior executives, your exco level, that works together. The next one would be your senior managers, your CFOs, your, you know, those that are head of your different departments, your COO, your CRO, that kind of level that has to do a certain amount of work in order for the exco to do their job. And then you get your middle management team, like your credit managers or your credit supervisors or your sales managers or your head of support or your training manager. I'm just talking about all the ones internally. Then you're going to have maybe your team lead area as well. And then you've got your individuals, and each team has something they need to do that works in conjunction with the team above them. So this person needs to do something so that this team can do their thing, and there it needs to go all the way up just like that, so that exco can make a decision, and that is where it fits in. So this is me, the individual person, and my day-to-day job, and what I do has an effect on my team, and my team has an effect on my manager, and my manager has an effect on, and it's not very beautiful, but you can see my manager has an effect on, I can see Martin is laughing at me, on the T on our company's senior manager side, and then obviously as a company goal, and then right up at the top would be our directors over here. So that this would be exco, and then the rest would be this would be your directors.
Board of
Okay.
directors, yeah.
And so that is what each one of these roles do. So when we look at that pyramid to say, where do I fit in, which was the question that was asked earlier, where do I fit in? What role do I have? So you have to think about, what is my day-to-day tasks? What team do I have? And what would my manager be? And from there, you can say, what is my actual role name? To say, you know, if you want to label it, then it would be, well, what are your day-to-day tasks? If they include multiple different areas, it could be that you're not a debtors clerk, but you're not a credit controller either. Maybe you're a supervisor, or maybe you are a team lead as well. And again, depending on the size of your company, you may be doing more than one thing because of the size of your company or because of the size of your debtors book. If you've only got 10 debtors, then you don't need 30 people managing 10 debtors. And if you do, I would then question what the CFO's plan was for that, and strategic planning as well. So that is where we wanted to leave it in terms of the different roles within the team, what each person is responsible for, and how that then translates to the bigger picture of the business. And by not collecting funds on time, by not growing our debtors book, it's going to affect everything that the CFO then ends up doing, to say, if we don't collect funds and we're writing off more bad debt than we're bringing in, what does that mean for my business? Then I'm going to have to start cutting costs. Then I'm going to have to start retrenching people. Maybe we need to move to a smaller office. And so those are the things that we do on a day-to-day basis that affects what happens later or further up the chain. So even from the person right at the bottom who's the debtors clerk, or even the salesperson, you're not bringing in sales, the debtors clerk isn't opening new accounts, you can't grow your existing debtors book if you're onboarding the wrong kinds of customers, and what kind of impact that they would then have on your full business. So that is what we wanted to cover today. I'm aware that we only have 1 minute left, but I will stay on for questions, and Martin also has something he'd like to say.
Just add something quickly. Your credit policy should line out exactly the different roles and what their accountabilities and responsibilities are. They call it levels of authority. So the debtors clerk does this, the credit controller does this, the supervisor does this, the credit manager does this, the divisional credit manager does this, the credit director does this, and the CFO does this. And all of those roles will be spelled out very clearly inside your credit policy. Who does credit notes, who does this, who does that, and if it doesn't, then your credit policy needs to be revised and looked at, because that's where it lies. It's your credit Bible that says, this is what you do, and this is how you manage this.
Absolutely. Thank you, Martin. Are there any questions from anyone? Otherwise, you feel free to drop off, and we will see you next week for our next section, where we will be talking about the credit terms and conditions.
Brilliant. Thanks, guys. Informative session, as always.
Thanks, Neil. Martin, there's a question there from Lebo. It says, please advise, based on your experience, what does it take to get to the level of a credit manager?
Lebo, are you still on here, or should I answer her in? Is Lebo still online?
I'm having a look. It doesn't look like it. Maybe you can just pop it into the chat. There, I can see Lebo is online. She's raised her hand.
Okay, Lebo, my recommendation would be that you either enroll with one of the credit colleges, and there are